and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's come on in and take a look at the charts as we do. Let's go, Bladow. All right, so we got that initial fade at the 618, as we said this morning at the Asian session. They knocked it down for New York, and New York bounced it off this 608 region of this pitch fan we've been having it in for quite some time. And that was quite interesting. Let's go look at what the liquidity said, as we do each and every day. What is the liquidity of the heat map here? Well, it's when people lock their liquidity in the charts to get burnt to a crisp by the market maker and don't pay themselves, which is why you should always lock in your gains before they come for you. So let's go see who they came for on both ways of the direction. So from yesterday, we were about up here and we were talking about coming down into the liquidity below, which we did, and they came down to that 28 27.4 region and ate it up with the Fury down here, 28 even rather. And then they came down for those 100x we were talking about at 27.83, and they came for those guys and bounced off them. Oh no, that was during the live, wasn't it? Yeah. And then we decided it was going to come down further to the 27.3 region, perhaps after taking out these. They came and took out these guys at 28.37-ish. They left that guy intact at 28.37, which is surprising to see. And then they came down to this liquidity here. So earlier today, we did see a rejection off the 618 region that we were putting out to people as it occurred, which was over here at 9 a.m.-ish, as I was getting on the train to go to a field trip with some students and my daughter. I was saying look for a rejection at the 618, which we did. And then around lunchtime, as I was watching a circus, I paid myself into profit nicely. And that was quite nice. I didn't have time to chart it out the other direction, so I just left my positive day intact. And yeah, let's go ahead and see where that liquidity was down to here. So they had their fill off the liquidity about here at 27.53. They grabbed a $221 million guy.
Fatality.
They grabbed his account and said, "Thank you, wham bam, thank you ma'am," and went the other direction. There's still some juiciness down below here at 27.45, which is interesting to note, but they were paying just one too many 50x shorts, and they came back for this guy up here that they left intact before, who still left it open, and they came right back for them with the Fury and this 100x guy as well. And so now we're consolidating nicely, determining whether to go back up to 28.93 for another hit. There are some 50x stacked quite nicely at that 28.93 region, suggesting you might go back up there from where we're currently sat. Once again, we went over how those gaps are similar to the broth of ramen. You would have a lot of soup here in between your noodles. It's not as full of a meal here, but if you go just up a little bit, you have a bunch of noodles here that are all caked up nicely. So it doesn't take much for them to just go up here and grab this 28.86 region here on the 1 minute time frame for High Block Capital. So let's go ahead and take a look at the chat before we go into the higher time frames. How y'all doing? Booyah, shout out to Prehab for just joining the Momentum Master Army. Link in the description. Yeah, so let's go ahead and take a look at the higher time frames of the heat map. I was a bit run down. I've been having field trip after field trip after field trip. It's nice for my daughter. My daughter was enjoying her spring break with her father, which is nice. But yeah, taking the train all around town. Remind me to tell you a story about Inuyama that I've been to in the past. I was telling some people in the Momentum Master Discord a little bit about it. Inuyama, Dog Mountain. So it looks like you still have some imbalance on the 7-day time frame to the upside at 29.5. They could come up to this region. Highly possible by the liquidity standards by inducing those longs up here at 29.5 a day ago, and they're still thickly open, so they came down and ate down into this liquidity here, grabbed a couple billion out of the market, and then starting to go off of their carcass on the 7-day time frame. Now if we go to the monthly, we can see how that enters the external liquidity range for that. So it looks less colorful in the range we're trading because the values change as you enter external liquidity. The 5 billion becomes cooler in color because hotter colors become more value. So there's less color in here, but there is liquidity, as you see. 5 billion, 3 billion, 2 billion. So they took another 5 billion here, and they're heading back up into these regions to the 2 billion, 2 billion, 3 billion, 2 billion, trying to get to the billions of dollars up above at 29K in order to potentially hit that 29.5 we were talking about on that 7-day time frame, which happens to be 14 billion on this monthly time frame of induced liquidity of the external range. So we go to the 3-month time frame, and that range becomes thicker because we tap into more pools of liquidity on that time frame. So that becomes 40 billion up here at 29.6, and then it starts to get half and tapers at 29.8. So as you saw before, I was talking about 29.2 for I don't even know, weeks, and I was saying that's the conservative price to think about, and we got there and then we pulled back a little bit. So if you were conservative, you would have been rewarded, and you would have been rewarded on the other side if you had been conservative about shorting it, which we were. And yeah, we've enjoyed both ideas because we don't get locked into a 30K or 55K mentality. We just take it one day at a time, which is nice. You don't have to be bullish or bearish. So yeah, you got some little regions down here, nether regions at 27K, starting to pave the way to those double digits at 26.2. So you still do have some liquidity down here at 27.4 and below, but not exactly caked up in such a manner as you have above. So you have a little bit more on the upside at 28.8 and 29 and 29.2, leading you to believe that they are going to this 29.6 region. Just for the Run for Profit Friday, maybe they're making that surge up for the New York session. Interesting. Oh, before we leave that time frame, we always go over what that other position could be. The downside is getting caked below that 26.4 region. So while that loads the 6 month, we can express it on this time frame too. So previously you had less liquidity down here, so it was darker, sub 26.0 here, and then now 22 billion down at 22.6. So you're starting to see these double digits of 22, 23, 28, 33 billion dollars on the sub 26 road to the downside. So there are these double digit numbers to contend with beneath the lows here at 26.4. So once we have a fill of a certain region at the 29.4 region, you do have $66 billion that they could come back to and tap. But as those pools above, which are thinner, wane, the weight which holds us up tends to drop us. So if we go to that 29.4 region, then you can expect some sort of absorption of that knockout of liquidity to the downside. How heavy will that be if they induce more, which they've been seeming to do? So if you look at this, they just keep caking it up to the upside. So they had previously, so here on March 12th, they had only $9 billion at 29.1. And so every time they hit the high, more people jumped on the shorts, And so now we at that 29.1 we had 57 billion, which they knocked out yesterday. So they just keep caking up the upside. So now you had this previous band of goodness of 21 billion, now up to 66 billion for that 29.4 region. So they just keep thickening up that upside path. So if you're ever wondering how is it we can keep going up despite all the FUD and bank foreclosures and all that, well, the shorts are providing that path to the upside. So they provide that extra liquidity for those folks down below. But if it starts to taper in such a manner where it doesn't thicken up in a fast way, so from 30K from 3 billion here to 30 billion isn't as intense as 20, their direction, the narrative would also tend to shift as these pools wane up and these get thicker and these sub 18K become heavier regions of liquidity. Then it starts to retrace in and scare them out of their positions. The shark changes direction, so to speak. So that's what we are looking at as the pools shift and undulate and morph each and every day. So it's important to pay attention and take note as to how they thicken and juxtapose them on different time frames. So this 29.6 region as a maximum seems to be the interest point for this potential upside move from where we're at currently. Let's go ahead. Ooh, we broke right through that. Nice. So if we go to the monthly time frame and see that color change. Booyah! Thank you for coming on in, each and every one of you. Alright, so yeah, you have that juiciness up above here that they could come back to just as easily as it dropped down yesterday. So let's go into the charts as we do. So we'll skip the pitch fan today because we are a little bit later on the live time. So we had this previous impulse retrace idea with the trend-based fib extension tool. We got above the 236, boom, we were gone. We went up to that 706 region. Yesterday we told you about a potential fatigue there, which we saw at 9 in the morning. Boom, we dropped down. We started to surge back up in the morning, and even though we hadn't gone live, we did talk about this rejection at the 618. Here is before it even rose, we said it's gonna probably go up to the 618 and fade. Asia likes to do that fake out. So they came up to that 618. They actually went up to the 65, in between the 65 and the 706, and then faded. And then while I was on my field trip, we just made 3%, so that was good. At 5x leverage, I was impressed. So I closed my trade because I noticed it was at that fib level, and that was an external trend-based fib level, external liquidity level of the 706 from here. And how did I get that? Well, I went to the top of this impulse to the bottom of the impulse on the daily time frame, and I just altered my fibs to just show the pocket region. So I just took all these lines off by turning on the pocket of the 706 to the 618, and that was where we came back to on that external liquidity, trying to SR flip it, and we found a bullish order block there to recover the daily fair value gap, and boomed out of there. You can't always get both sides of the trade. I could have just switched positions there, but I had to monitor everyone getting home safely, so it is what it is. So a good play to the downside was good. It liquidated some bulls who drew their bull flags up here, so I was happy. Yeah. So how far can this go? One way to see is to use that trend-based fib extension tool from here, from this impulse to the top of the impulse to the bottom. And if you had seen us maintain 2874, which we did, then we could come up to these regions, which also happen to coincide once again with the previous hit to the 706 here. Well, we didn't actually clear it out completely, but this 29.2 region. And 29.4 and 29.5 becomes a possibility, so somewhere between here and here doesn't seem unrealistic as you get granular with it. So we could come up into that region. Interesting. On the 4-hour time frame. All right, so we're going to go into that 0 point energy now. Let's clear our mind of everything. All right. How you doing out there? Good. Me too. All right, so we're going to throw on our indicators. If you quiet your mind enough, you can feel the connection. Did you know that the iron in your blood came from the death of a dying star? A protostar which formed the Earth and all the planets, also created all the elements. And the blood flowing within your veins came from the death of a dying star. And as the Earth and the core moves, it projects a magnetosphere into space, which blocks 99.99% of the light and only lets a fraction of that radiation through, which burns my face quite easily. And if we didn't have that living core, we would be dead by solar wind within the minute. And on that note, let's go back to the charts. All right, so as we saw here on the cloud was that you burst through the cloud, you come back, you kiss it, and boom, you were gone. So we weren't thinking about staying in the short forever. And the cloud was shifting positive, which it did. It held that cloud quite nicely after bouncing off of that 706 region of the external liquidity range. You could have just traded the fibs. You could have traded the Momentum Master Cloud Kiss. You could have done a lot of things without a guru, mind you. Be your own guru is the idea of Momentum Master. You can kind of see these things in the chart yourself. They can send you alerts to your phone. I got the 3 time frames alert as I was at a circus. So I was like, oh man, that's a nice payout. And then there was bullish divergence here on the RSI. So I was good to get out. I just didn't want to monitor any further. So where is it? It's not loading. Let's go to let's flip between the time frames so we can get this thing to load properly. Boom. That was at 3 a.m. Where was that? I saw it for a brief moment. It must have been on a lower time frame. I swear I saw one of these circles. It must have gotten bought up as it was appearing down here at 4:30 as I was getting on the train. So, all right, well, let's go back to the 4-hour time frame. So we had that nice cloud kiss on the 4-hour, which curved us up here on the stochastic RSI, so we could be good to go to bang up on the 4-hour time frame. The 6-hour, which was also trying to reset, came down to the 50 region, found some recharge off of the RSI and the money flow, and the Williams it's still in an ambiguous point in terms of longing from a comfortable region, but that double bounce, that half reset of the 6-hour occurred basically because the 12-hour was still trying to find its way in the 50 region of itself. Inverse head and shoulders here on the Williams, potentially coming to push this up on the 12-hour time frame. Now this will close in 9 hours at the daily close, so that will coincide with the 22. So let's look at the 22, shall we? The 22 has been steadily going up, has not maxed out or gotten overbought just yet. So with that 1222 guiding light, it has been pushing and curving the 6-hour and the 4-hour as well. So that run for profit Friday has been to stop out all of the longs and then move in their direction off of their liquidity, which it has. We caught that downside knockout, and let's see if we can find a entry for that continuation to 29.5-ish and see if that's possible. So it looks like the majority of the move has played out, and you would look for a reset of some nature. A reset would cause our little price action to make some sort of channel of some sort. It can go down in a descending manner, stay sideways in a certain manner, or be ascending in a certain manner. There are like 3 variations to what it could do right now, and you just kind of chill out and see how it goes. And you look for that bullish reset where it goes sideways and yet this comes down like that, and then you maintain the price action, and then you find that entry on the 15 or the hourly. But it looks like we are currently out of that region for the entry, so we would just be chilling like a villain waiting for that. You got that W formation, that potentiality of coming out of this range as well. So the previous range point, let's see where that was, 28,655. Let's go check that with the liquidity here. $28,655 would be around here. Looks like they knocked out that 28.54 guy. 28,655. And they wicked up, so they didn't really get that guy because you have to hold it for like 6 or 5 minutes or something. Would you show market sessions indicator? All right. So the market sessions indicator is ICT kill zones by Tradinator. I just do the default here, and it automatically removes it as you approach different higher time frames. So if I go to the hourly, it's going to disappear, gone. So it only shows when you go to lower time frames. So that's nice. I was talking earlier today, because Asia likes to pump it before they dump it, which they did. So yeah, if you know the Asian range here, this is 9 a.m. my time, so I'm in Tokyo. So Hong Kong is about an hour later. So I was talking about here as I was getting on the train in Nagoya. I said, look for that 618 rejection. We bounced up here and got rejected and faded throughout the Asian session. And then London decided to continue it. And then that's happily where I closed my trade. So if you know how these sessions play off of one another, rarely does it go, down, down, down. That does happen, but you can go back and see Asia yesterday brought the rise fail, that pump and dump. Asia likes that pump and dump. They don't have super sustained moves all the time. And if they pump it to dump it, then London consolidates and plays off that and rose up to dump it. And then New York kind of stop hunt rised and dropped it. So you had those 3 hits to the high of each session. So you can see how each session kind of complements the move that coincided with that downside. And here you have Asia, which rose it, dropped it down to London, which rose it, so that they didn't really complement the move necessarily. It reversed the move, and so then the complementary move would have been New York, which was out of there. So rarely do you have all three in sync. You'll have 2 out of the 3 in sync generally. Here you kind of had the ambiguousness of Asia, but it was establishing a short position in actuality, and then London and New York kind of set up the drop. Here you had London and New York set up the rise after Asia dumped it. So they have this little drama between Asia, London, and New York, and if you follow when they open and know what time Hong Kong likes to do its funny business, then you can put out the play that we were talking about earlier today, where I said Hong Kong likes to appear strong before they fade it, and then boom, they got up and did that. And that is how you use that indicator. So yeah, that's why we have it on. It's pretty cool. And yeah, we can remove this fib now because it's in the past. And yeah, what will we do at this point? Well, let's go to the S&P and see how that is doing. It looks like it gapped up into the top of our regions here on the take profit levels, and we are getting nukes up here on Momentum Master Ultimate. Now these nukes are showing exhaustion on the time frames. We previously saw one start to appear here before it did actually pull back. We were talking about as you break out of the structures and you're bullish, that is when you ignore them, because previously we had seen some nukes close as we broke out of the higher time frame structure here on the S&P. And if you do it within the structure, as we did here, you fall down. Rocket within the structure, up. Rocket within the structure, up. Nuke within the structure, down. And nuke within the structure, down. Nuke as you break structure, ignoring because you're in novel territory, trying to make discovery into new regions. And so are we trying to do that now? It looks like it. We had a daily time frame close with the nuke not too long ago, and we are reaching into that disco range of the new structure outside of this previous downtrend structure of the bullish megaphone. So we have that shoulder, head and shoulder starting to play out that we put out for you some time ago. If you aren't seeing it, here you go. So we're starting to see that potentially play. And that conservative path on the daily time frame for this is also getting met. What do I mean by that? Well, let's go to a lower time frame and show ya.
How's it going out there? Are you awake?
All right. So we're going to see where that was on a lower time frame. Booyah. So we had that rise retrace idea projecting out into the future. We just left it there. The lines are starting to get garbled in terms of we've reached the 1382. We could just leave it there and see it approach the 1618, but we can get a better image of the lines by taking a better impulse retrace idea. So let's go to a daily time frame, shall we? So we're going to take that daily time frame trend base fib tool from here to here at this point. And so we're reaching above that 786 region, which then puts us on that bullish path to here if we continue. But most likely you'd have to reset these nukes on in some fashion. What does that mean on the daily time frame? Well, that means you would kind of have to come back to these cloud regions before you bounce. So this cloud, which is purple and still starting to curve but needs to thin, would come back into this region at this point. Whoops. Let's delete that. We already got the bounce off the 618, so we'll delete that too. And yeah, that could be sometime next week. So sometime next week we could see some sort of pullback into Tuesday, Wednesday-ish, Thursday midweek reversal to continue perhaps. But yeah, you could see a pullback to kiss the cloud as you broke above it, and you got all these gaps below. So that aggressive, knocking out that aggressive buy side liquidity. I think options expired today as well. So that expiration, whoops, I don't want to move that. That was a line that meant something, so I'll leave that there. So yeah, at some point after the rise, you could see a pullback because the options will have expired. So where do we think? This was a fair value gap, if I'm not mistaken, at 40,091. So if we rise up to that region, then you can expect some sort of like retrace down into this zone. How far do you hold it? I don't know. You could come down here and find some range within it. That's just me spitballing on a dime for the S&P. Let's go to the DXY real quick. We had previously put out the idea of a double bottom ensuing, or bounce rather ensuing, if we come back down to this double bottom of the 786. We didn't necessarily come back to that exactly before we started to see some sort of shift out of here on the 4-hour time frame. This could just be gearing up to go down to that region though. We should recover this tweezer bottom down here anyway. The wicks need to get kind of tampered with. So we could come down as the S&P continues to make that surge up slightly. And if we go to BTC, that should also coincide with their upside potentiality. So that upside push into those regions could coincide with that idea of the S&P as well. So that S&P push up. There's a lot more volume in here than Bitcoin, so it takes a lot more to move it that percent up, believe it or not. I think somebody was breaking it down in the Momentum Master Discord that in a 5-minute candle, it contains more volume than what Bitcoin trades within a day. So 5 minutes of the S&P and NASDAQ has more than what Bitcoin does in one day. Just to give you a heads up on the liquidity difference. And Momentum Master is very accurate on the stocks. There's a lot of stock guys and Forex guys using it in there with huge success. The more volume, the more these maths get more accurate actually. So it's pretty nice. Yeah, I like this song. This song's cool. I like the piano. Alright, so we're gonna see some sort of chill out zone here. As we said, it's gonna be some weekend trading possibly that takes us up to there. So we can move this over. This is Saturday 5 a.m. So Saturday, I don't know, let's just move it over. It could even be the weekend trading after that. Sunday, push into the weekly candle close. I have no idea, but let's just move it off into the future because we need to see some time frames reset first. So we got that kiss off the cloud on the 4-hour as it does. And we're going to go into the hourly time frame. So the hourly time frame cloud is still kind of taking its time to shift, which shows that the price action shift here was not necessarily filled with volume. It was kind of potentially a stopping volume because this didn't get curved as easily, which is interesting to note. If we go to the PVSRA strategy, they are blue candles. Blue does suggest stopping volume, which is interesting. You see these green ones that are 200% of the previous 10 candles. That shows a little bit more intention behind the move. The blue shows less intention, simply put. So it could be one of these dealios that goes down to the cloud once again and kisses off of it in this manner. Let's go to the 15th. The interesting thing to note is you're seeing this shift. That was a definite sell-off candle. That was red in volume, but the buyback was not as intense, let's say. So it hasn't shifted that cloud to even thin a little bit, which is interesting to note, which means that it could come down to the cloud more aggressively. So it could come down to this cloud to reset that 15 and hourly, at least to recover these gaps. What do I mean by gaps? Well, this is also another free indicator called fractal break imbalance fair value gap liquidity void. It'll put these on your chart. If you look in more detail on different time frames, this goes up to here, but if we go into a lower time frame, it's most likely trading fairly within a region here, so you can narrow that gap down to a specific region, and that specificity can provide you with the order block potential for a bullish order block to ensue. If we go to the 5 minute, it did trade fairly in here, so that gets even more narrow as you come down to here. And then you can just take that and be like, what's that value? 28,229. Okay. And then we can go coincide that with the liquidity. 28,229. There's not really much there, so I don't know what that math is saying necessarily compared to this. I would want to come down to 28 or 27.95 if I were going to knock out these ramen noodles before coming higher. I'd want to take out this guy at 27.95 personally, but this is how a fair value gap works. So this would be another fair value gap, which would also coincide with that idea. So you could go down to here, 27.95. 27.95. Yeah, that lines up nicely for me, so I wouldn't really worry about this one per se. I'd be like, why don't you come down to here actually? Why don't you bounce off this guy? That'd be cool if it were going to come back. And then if you go to the retrace idea, that's going to fall in line with the 618 most likely. Oh yes, that's looking juicy right there. 27.95 for that 618 bounce, ladies and gentlemen. 2795. If it were going to continue up to the 29k region and you want that safe skadoodle entry, that would be where you would see it go down to 2795. And then all the bullish moon boys once again will be drawing their bull flags here, trying to enter aggressively here on their euphoria, and they'll use that euphoria to eat them up down to here, as they did yesterday. And we watched that come to fruition before those moon boys put their flags here, their Mario flags here, as it broke down in their face. So is it going to break down in their face again or propel them to the upside? I don't take those entries anymore. I've been burned as one of those Mario flag traders one too many times to be a Mario flag trader anymore. So I would just wait for it to come right back to here and be that smooth entry. If it were going to continue, you'd be in a nice position. And there's myself getting into the pocket, getting into the zone where it starts to do as we say it. But it's not me, it's the math. Don't get ahead of yourself and don't start believing your own BS, because you're all the same ash that came from a dying star, as we said earlier. You are all just ash. But not in a negative way, in a beautiful way. That means we're all connected and we are all one energy. Undeniably connected and inextricably one thing. So, yes. Anything you want me to look at? The ramen noodles? The ramen noodles are here on the right hand side. So basically yesterday we were talking about if you can't make heads or tails of these bubbles, right? You can look to the right and you see these little lines, and I was like, you could call the lines like noodles, pick up sticks, and the longer the stick, the more volume basically. And the gap between the black line, which is the current price tag, the gaps is like your broth, your soup. And for them to pay, so if they were to go down to this thick liquidity, let's say down at 2742, which is thick, which they left intact, in order to go back to that, they'd have to go all the way down, and there's a lot of broth, there's less noodles, less tastiness for them to burn to a crisp here. So it makes more sense that they would come up to these guys here if not. However, this orange noodle, which is 100x, which also coincides with what we just put out at 27.95, they're tired of paying this guy, so they're going to come back to that 194 million pool to knock them out. So yeah, the strength of the noodles changes, but basically the point was that the more gaps between them, the more it insinuates that they're going to go higher up into the more noodle to get their appetite filled. So I was using the analogy of noodles for these guys over here to make sense of it in an easier manner. Yeah, so thanks, Rainier. So it's coming back down on people, but it is kind of, yeah, that zone, that 618 looks good to me. I don't know how I could put it in a better place right now. We caught that 618 rejection. Now you get that 618 bounce. It doesn't really matter. This is just a range trading zone by the looks of it. And what can you do for that? Well, you could take like a fib from top to bottom here on this range. And actually, yeah. So wherever the fair value is, like if I do this 0.5 region, right, we're gonna just go over equilibrium once again. So this 0.5 region at 28,338 is the equilibrium price for this range. What's the range we're talking about? Well, from here to here. Inside of this box is a range, and people can trade with just within that range. And that's what they do. They just scalp up and down between these ranges, and these range numbers, the 236 down here is a discount at 27,906. So below 27,906 is an extreme discount price. So there's people that just buy in that region, and then that happens to be a bullish order block, and then they come out of that. And then when they get to the 618 region, which we are at up here, which we're getting rejected at, that's a premium. So you buy at a discount, you sell at a premium. So it's not rocket science. So the people get in down here and they sell as it gets above equilibrium price. Equilibrium is, again, the 0.5, the half value. So below half is discount, above half premium. And so you'd be looking to establish shorts in the premium and looking to establish longs in the discount. And you could just play those range trade things and just avoid buying at a premium. You wouldn't buy a car as the price goes up, you would buy it as it goes down. So you wait for that price to get in a discount before you buy your car or house or whatever it is. It's just good economics. So don't be the guy who buys at a premium based off some infomercial. So that is premium versus discount. So, did you guys have anything for me to look at while you have me? Booyah. I guess not. We've lost a few of you to the ether. So on that note, we will stick there then, and we will just call it a day. I think we got it trapped in a nice manner. As the 15-minute undulates its way down, as does the hourly, you would be waiting to see some sort of point, but you would hold true to your idea. Even if they induce some sort of bull flag here, it's not the place to do it. And if it misses your zone, then wait for the next one. We got that 618 to the downside, so it would make sense to get that 618 to the bounce to the upside. So yeah, that's about it. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and I will catch you on the flip. Booyah.